how Warren Buffett actually got rich. Welcome back, folks. In today's video, we're going to explore the fascinating life of a man who's become a legend in the investment world, Warren Buffett. He's not just a role model for investors globally, but a beacon of inspiration. So, hit that like button, subscribe to our channel, and let's embark on this journey together. Ready? Let's dive in. Warren Buffett's story is a remarkable one, beginning when he was just a little kid, at 11 years old, buying his first stock. His journey, filled with smart decisions and investment strategies, is a popular subject in countless speeches. It's a story that encourages every investor, whether a newbie or a seasoned pro, to learn from his wisdom. But who really is Warren Buffett? Known as the Oracle of Omaha, his life is a testament to what smart investing and solid decision-making can lead to, becoming one of the wealthiest and most admired businessmen on the planet. Born in 1930 in Omaha, Nebraska, to Howard and Layla Buffett, young Warren showed an early interest in all things financial and business. He was a whiz with numbers, able to add large columns in his head, a skill that would prove invaluable in his future career. There's an interesting legend about him. He supposedly told a friend he'd jump off Omaha's tallest building if he wasn't a millionaire by 30. Lucky for us, he didn't have to keep that promise. Warren's investment journey started at 11 when he bought 3 shares of City Service preferred at $38 each. He sold them at a small profit when they hit $40, a move he later regretted as the stock soared to $200. This was an early, important lesson in the virtue of patience in investing. At 13, Warren took on a paper route, delivering to the Washington Post at 4:30 in the morning. He also sold magazine subscriptions and calendars on the side to his newspaper customers. By 15, he'd earned $2,000 from this venture, about $26,000 in today's money. He smartly invested $1,200 of it in a 40-acre farm, partnering with a Nebraska farmer for profit sharing. At 17, while still navigating the challenges of high school, Warren Buffett and a friend embarked on a small business adventure. They purchased a used pinball machine for a mere $25 and strategically placed it in a local barber shop. This modest start soon blossomed into a lucrative endeavor, with Warren and his friend expanding their operation to include multiple pinball machines scattered across various barbershops in Omaha. The duo's business acumen paid off as they began earning about $25 a week, a decent sum, especially for high schoolers at the time. Their entrepreneurial journey culminated in selling the thriving business for $1,200 to a war veteran, marking their first significant success in the world of business. Warren's academic journey continued as he graduated from the University of Nebraska. He earned a Bachelor of Science degree, proving his academic prowess. With a clear vision for his future, he set his sights on Harvard Business School, a dream institution for many aspiring business minds. However, life threw a curveball at Warren when Harvard rejected his application. But as with all great success stories, this setback didn't deter him. Warren, resilient and determined, saw an opportunity in this rejection. He shifted his focus to Columbia Business School, drawn there by the prospect of learning from Benjamin Graham, an individual he greatly admired and respected. Benjamin Graham wasn't just any professor, he was a legend in the field of economics, and Warren saw immense value in learning from such a renowned figure. In 1951, Warren's determination and hard work paid off. He graduated with a Master of Science in Economics from Columbia Business School. This achievement wasn't just a milestone in his educational journey, it was a stepping stone towards his future success. It laid the foundation for his illustrious career, shaping him into the investment guru we know today. Warren's time at Columbia was more than just academic. It was a period of significant personal and professional growth, deeply influenced by the teachings and philosophy of Benjamin Graham. Returning to Omaha, he worked as a stockbroker and took a Dale Carnegie public speaking course. He even taught night classes at the University of Nebraska. In 1954, he moved to New York to work for Benjamin Graham himself. Warren's willingness to embrace diverse opportunities and his relentless pursuit of his goals were evident even then. In 1954, Warren joined Benjamin Graham's partnership, starting with a salary of $12,000 a year, about $109,000 in today's terms. When Graham retired in 1956 and closed the partnership, Warren's personal savings were over $174,000, equivalent to about $1.5 million today. Warren Buffett, after exploring various opportunities and gaining a wealth of experience, decided to return to his roots in Omaha. In a move that reflected his famously frugal nature, even as a millionaire, he purchased a modest house for $31,500. This wasn't just a place to live. It was a symbol of his down-to-earth approach to wealth. He didn't splurge on a lavish mansion, but chose a simple, comfortable home. During this time, Warren immersed himself in the world of finance as an investment salesman and securities analyst, honing his skills and deepening his understanding of the market. In 1956, with a vision to create something of his own, Warren founded the Buffett Partnership. He started small, securing investments primarily from close friends and family. This wasn't just about pooling money. It was about building trust and relationships, a cornerstone of Warren's investment philosophy. Warren, in his typical strategic manner, approached one of his partners, a doctor, and asked him to rally 10 other doctors to invest $10,000 each in his partnership. The response was positive, with 11 doctors agreeing to invest. Warren himself put in a modest $100. However, he planned to increase his share by reinvesting the management fees earned from the partnership. This approach was not just about making money. It was about creating value and growth for all involved. By 1960, Warren's foresight and financial acumen had led to the establishment of 7 partnerships. He smartly managed these ventures, owning a 9.5% stake in partnership assets that were now worth over $1 million. Just 2 years later, in 1962, these partnerships catapulted Warren into millionaire status. His share had grown to over $7 million in assets, with more than $1 million belonging to him. This achievement wasn't just a testament to his financial prowess. It was a clear indicator of his ability to see potential, take calculated risks, and multiply investments effectively. The year 1962 was a pivotal one for Warren Buffett, marking a major turning point in his career. This was the year he acquired Berkshire Hathaway, a textile company based in New England. Once a thriving enterprise, Berkshire Hathaway was struggling due to ineffective management. Warren, with his keen eye for potential, began buying up shares in the company, eventually leading to a significant change in its leadership. Despite his efforts to turn it around, the company continued to face financial challenges. However, Warren was not one to be deterred by setbacks. In 1966, he made a strategic decision that would redefine the future of Berkshire Hathaway. He recognized the declining prospects of the textile industry and decided it was time for a major shift in strategy. Warren began transforming Berkshire Hathaway from a struggling textile company into a powerful holding company. This move was the start of what would become a legendary saga in the business world. Berkshire Hathaway's evolution gained momentum in 1967 when Warren directed it to acquire 2 insurance companies. These acquisitions were more than just business expansions. They were strategic moves. The cash flow from these insurance companies provided the financial backbone for further investments and acquisitions. Under Warren's guidance, Berkshire Hathaway began to grow exponentially, branching out into various sectors and industries. Today, Berkshire Hathaway stands as a colossal conglomerate, overseeing more than 1,000 companies and boasting assets that exceed a staggering $700 billion. This transformation from a faltering textile company to a global business titan is a testament to Warren's visionary leadership and investment acumen. In 1990, another milestone was achieved. Warren Buffett's financial savvy and strategic investments paid off in a big way, making him a billionaire with the sale of Berkshire Hathaway's Class A shares. But Warren's impact extends beyond the realms of business and finance. He is also renowned for his philanthropic efforts. One of his most notable acts of generosity was donating 185 million shares of Berkshire Hathaway, valued at $28.3 billion, to the Bill and Melinda Gates Foundation. This massive contribution reflects Warren's commitment not just to building wealth, but also to using that wealth to make a positive impact in the world. Today, with a net worth of over $84 billion. Warren Buffett stands out not just for his wealth, but for his simple, straightforward, and honest nature. His intellectual prowess is unmatched, and his charm and wit have captivated people worldwide. Warren Buffett is more than a mythical figure. He's someone who found his passion early and dedicated his life to it. If you enjoyed this video, please subscribe to our channel to tune in to other upcoming interesting videos. See you again!